Very nice. I'm a little bit late. I was making myself a coffee. Do you guys drink anything this morning or this afternoon or good afternoon? Good afternoon. So it's afternoon on your side of the world. It is morning on my side. Okay, I'm just going to deactivate the this. There you go. Hello, hello.
Morning, Joe.
Morning, Justin. Make sure that you guys are muted if you don't want to speak up, or because we're going to get a few people in here, and if all the persons that are joining are mic on, it's going to be a nightmare.
You look like you packed up quite a lot of your office.
Yeah, I'm packing my office. I'm moving to tomorrow, actually. So still doing the mentoring session, but I'm moving away in another house starting tomorrow. So that's the reason why I'm making the actual mentoring session today and not tomorrow as usual.
Yeah. Where do you live, Joe?
I'm living in Canada, in Quebec.
Okay.
Where are you from?
Just outside of London. So
Oh, nice.
that's
Yeah,
40 miles.
we have quite a few people from the UK.
Yeah.
London, Ontario, or London in UK?
London, UK.
Okay, because we have London in Ontario as well.
Yeah. So we're literally
Nice.
about 40 miles.
So yeah, Bybit just hit UK, right, for the actual KYC thing.
Oh, I know. I've done my Palau thing already. So
yeah, and it's not going to stop. In the end, we know that the government want us out of the market because they don't want us to trade with leverage. That's the big issue they have with us, is that we're able to trade with $100 with 100x leverage and still be able to reach the level to compete with the big boys, and they don't want us to compete with the big boys.
Like you say, it's only going to get more draconian as time goes on.
Yeah, the more and the mad that crypto is going to be, the more problem from the standard financial market is going to be for us, for sure. But I'm pretty sure other solutions going to come up on top. I'm watching for a decentralized exchange to come up on top in the near future. For me, that's going to be the real solution for the decentralized finance stuff. Anyway.
Yeah.
So okay, very nice. Okay, very nice, very nice. Yeah. Okay. So let me share my screen first, because we're gonna do a little bit of drawing here for the new person who are brand new here in the room, because we're not many, but still you guys are few who are brand new to those mentoring session, never been to one. You can today's your Zoom is your name is Zoom. Welcome, Zoom. So today's your first session. Welcome, guys. We have a few ones that are brand new. Okay, what we're gonna do today, we're gonna analyze the actual rules of the 3.5A, find out what makes a good 3.5A system, how to make good decision when you take those trades, how to find the first wave, that kind of thing. And we're gonna do a little bit of live trading, trying to find those nice trade, and maybe a little bit of confidence around those trades to find a good 3.5A, because again, the market is weird. We need to have as much confidence around our trade as possible. And that's what we're going to do. And if you have any questions about what I'm discussing right now, you can post that in the actual chat section, or you can ask to raise your hand so we can give you the right to open the mics. Just don't open the mics randomly, so we can get in quite of a sense of an order in here, and not just get random people opening their mics. We're not that much right now, but it could be quite of a nightmare if people start to open their mics randomly. So okay, sharing my screen right now. You've been struggling to find 3.5A. Okay, yeah, we're gonna discuss that a little bit. So just make sure, can you guys see my screen in the chat? Can you? Yes, okay, very nice. Good. Let me pop on my chat so I can see the same thing as well. Okay, so 3.5As are based on Elliott wave, right? And Elliott wave is let's say that the 3.5A is we're trading the reversal of an actual uptrend. In that specific case, it's not trend, but you can find those in a downtrend as well. Not really like that. Let me just correct my stuff a little bit more like this one here. So we can see those in the up or downtrend, and you're trading the reversal of that. So you need confidence around the 3.5A to make sure that your 3.5A is actually a good one and not really just the trend is not going to continue doing that, right, and still going up while you're trying to short it in the end. So the rule of the 3.5A is that 2 cannot go back down to 0, cannot go like this. So 2 must be above 0. 3 cannot be the smallest. So the third wave cannot be the smallest wave. It doesn't have to be the longest, but it must not be the smallest. And you have the rule of alternation as well, which must apply to natural Elliott wave. If 2 is simple, then 4 must be complex. And if 4 is simple, then 2 must be complex in that specific case. 4 cannot retrace in the price action of 1. That's one of the biggest thing that I see in the public section. People are calling for an Elliott and 3-5A looking like this sometimes, right? They are like all over the place. And those are not valid 3-5A. Those are invalid. This is just a nut trend in my opinion. So again, 3 cannot be the smallest. 2 cannot go in the price region of 0, back down to 0. 4 cannot go past 1. It can go in the actual price region, but it needs to be rejected quite quickly of that 1. It must not consolidate in that price action of 1. I'm going to show you a little bit of that in the future to see. I'm going to show you a little bit more in the live trading section on how what is actual price action of 1 and what is a rejection. Because when you see candles, body candles, those are price action. But when you see wicks, let me zoom in a little bit in here. I'm on 1 minute, let's go on 15. When you see those body candle close, those are actually close of the price action. But when you see their big wicks on top of it, this is a reaction on that specific time frame. Now it's 15 minutes reaction. But you see reaction over here, and you see another reaction of that specific level here, which is a nice resistance at that level. So when you see reaction, this is the type of reaction you want to see when you have a price action going from 4 back into 1. Now I lost my drawing. Nice. Where is it? Let me go back into 1 minute. Try to find out where. Okay, let's redraw it then. So we have the 5-wave formation like this. Third is the longest in that specific case, but it doesn't have to be. It must be not the smallest. And yeah, so you have that specific formation. I'm going to show you how to find those 1-way, because this is the actual golden area right now. To find the 1-wave is kind of where people have issues usually, and we're going to find those together. Usually those 1-wave are located at a break of a trend, break of a triangle, break of an actual support level, break of a channel pattern. I'm going to draw some things here to show you what I mean by that. So let's say we are in a downtrend over here. Never find those drawing tools. There you go. So we are in a downtrend, and we're going in an uptrend, right? We break out of this thing here, which is a downtrend. In that specific case, this is not a good idea. Let me just redraw it to make it more compliant with what I mean by that. Maybe a little bit more like this, a little bit more like this. So the third must not be the smallest. There you go. So we have a downtrend coming out of it, retesting that downtrend channel, coming up after that. So this could be an actual Elliott wave. Why? This is the first wave, because first wave is coming, crushing that specific resistance, which could be a triangle, could be a zone, could be anything, right? So we can see that if we draw a trend line over those lower highs here, we see that we have a nice break out of it, out of that specific channel, and retest of it, and coming up again. So for me, that's a good idea to actually go for a hunt on the 3-5A, or maybe on a CH channel. As you can see, we could add a CH channel over here and try to grab this one over here and ride it to the 618 and make a CH one out of this. Let's just concentrate on the 3-5A for now. So when you see that break of a trend, now it's time for you to look for CH1 and for 3-5A. When you have a valid 1-wave, you see the price coming, crossing that 1-wave, your 1-wave, you can try to fib this now. Try to fib from using the trend-based fib. You have 2 tools that you use when you do the 3-5A. You have the trend-based fib, and you have the retracement fib, Fibonacci. So trend-based fib is used on the 1-wave to plan for the 5th wave and to plan for the take profit of your actual when you have an ABC correction. Yeah, so if you take the trend-based fib from 0 to 1 back to 0, I'm going to adjust that just to make sure I'm complying to the actual what I'm saying. So in that specific case, we have a nice second wave. Second wave is not going past 0. Third wave is not the smallest. Now I cannot show you the rule of alternation, but I'll show you what I mean by that in the live trading session we're going to do after that. And the fifth wave is arriving at the 361.8 or the 261.8. It can be like this one here as well. So 261.8 and 361.8 are the level that you want to watch for the specific things. And now when you see that, you flip the one wave, you have a valid wave, you have the downtrend coming out of it, retesting it. You're like, this is a good 358. So now you want to plan your actual trade. So you're going to wait for the price to come back crossing 3, coming up again and coming back down. So why crossing 3? Because when you take the trend line and you put a trend line on top of 3 and at the bottom of A, if the price is not crossing 3, then your actual channel is going to be upward, and you're trying to short it. Remember, if you short it, you're shorting the actual 358, then the trend line that you need to draw must be going downward, not upward. So you're going to wait for A to cross 3, and now after that you take the Fibonacci retracement tool, which is the other tool that we use, from 5 to 8, and you enter at the 618 of that move, which is supposed to be your B, right? But we don't. Oh, it's so little. Can I do this? Yeah, I can. Okay, because my tools are so small because I'm under 1 minute. So you're shorting over here. I don't even see it. It's so small. Yeah, I need to switch actual time frame next time. Okay, there you go. So stop loss right above 5, and your take profit now. To know the take profit, when the price you have a valid B, this is where you're going to take the final take profit. But to know if the trade worth taking, and you have a valid A right before entering, you want to take the trend-based fib extension tool. Trend-based fib extension from 5 to 8 back to 5, and you aim for the 161.8 or the 261.8, depending on what. Depending, what I do is like I use a trend-based fib retracement tool, and I fib the whole wave. And the one that is closer to the actual 618 of the whole move. So in that specific case, the 1618 is really closer than the 261.8. 261.8 is really down there. Could it reach it? Yeah, but we're not gonna gamble on that. We're gonna stay with the 161.8 in that specific case. And if we take a look, we have a 3.2 risk ratio, which is nice. And now when you have a valid B, price coming back down out and crossing 4, you need to do 2 things. Now it's time for you to plan your actual take profit. So let's do, again, you take the trend-based fib retracement, trend-based fib, yeah, from B to A, back to B, and you aim for the 161.8 or the 261.8 again, the one closer in from the 618 of the whole move. And you need to do 2 things when price action is crossing A. 1, plan your take profit, and 2, you move your stop loss to the swing high of B. So if it's a snipe entry, good for you. You're gonna get a free trade, break-even trade. But if price is not coming back down to you're not getting a snipe entry, then you just move your stop loss to the top of the swing high on B, which is in that case that specific stop loss here. That is about it. That is about how to trade the 358. Do you guys have any questions on that? Or nobody typed in the chat? I hope I didn't mute myself during that session. You guys have any questions on that? On the 358?
Shows how you use CH1 to actually confirm it's a good 358.
You don't use the CH1 to confirm that it's a good 358, but sometimes you take the CH1 as confluence. I'm going to discuss that after that.
Yeah.
What is the best time frame? We don't have a best time frame. You can find the 358 in the 1 minute, in the 5 minutes, in the 15, in the 1 hour, in the daily, in the weekly. But usually I like to stick on the 15 minutes because there's a nice balance between a good realized 358 and a quick trade getting out of it in profit, or either in stop loss, but hopefully in profit. So yeah, that's it for now. For that one, shouldn't the third wave react off one of the fib level? It doesn't have to react, but of course it's a nice confluence. If you take a nice fib retracement tool and you fib the whole wave, and you see that the third wave is reacting to some of the level, the first wave is reacting to some of the level, and yeah, it's a nice confluence as well. And if you see, it depends on how much confluence you need in the trade. In that specific market, the best confluence, the most confluence you have is the best idea because we don't know what is going to happen in that specific market, right? We need a lot of confluence. And yeah, if you have the fifth wave over here coming to the 361.8, and the third wave is coming to maybe the 161.8 like this one, or reacting to the 261.8, yes, it's added confluence for sure.
I had a quick question if you don't mind answering. Do you ever take 3.5As that where the fifth wave touches the 4.618? If like the rest of the lines are having really good contacts with like the previous touch points of the fib extension? Because I've seen in hindsight 3.5As work if they touch the 4.618, especially if like all the contacts are really clean on the other points of the fib.
You can, if you want to use the 4.618. Craig is not, and Craig is not teaching that in the course. So the 4.618 is not a level that he's watching. Can it be used? You can use it, but if you're a beginner, I would stick to the rules just to make sure that you follow strict rules. But if you are used to that specific 3.5A system, and now you want to expand a little bit more on your trade, I could use the 4.618 in a sense on my own trade. But I know that it's out of the 3.5A.
What's the downside? Is it more risky, like, or is it not a real fib extension number? Because I thought it was just another, just a really extended line. Yeah, say if that happened and all the other points were touching really nicely, would you not take it because it went too far?
Again, I wouldn't maybe take it, but would be part of my own 3.5A strategy and not into the actual 3.5A system teaching the course. Why? Because that would be a good question to ask Craig. Why?
Yeah, I'm curious because it doesn't seem like it would invalidate anything. It just
yeah, it's
especially if they're touching the points really nicely. Like could that not just be considered like more confluence that it's like a good Elliott wave because it touched the like if it touches it really cleanly and the three's touching the two like you have drawn here and the other points are touching nicely. Like I thought the 4.618 is just another extension level.
It is, but I think it's just out of the comfort zone of Craig. You
Okay.
know, in your training journey, you have to aim for something specific. If you're all over the place, you're like having general rules, then you might not be profitable as Craig is profitable right now. So the one of the good things is to set yourself some rule. I'm gonna take this because of that, and if it goes there, maybe he did some back testing, and for him the 4.618 was a reacting point, but the price one was not getting a good push down to get a take profit. I don't know about that. That's gonna be
there have been a few times I actually noticed in backtesting that when the 5 wave was close to touching the 3 or was like kind of just above the 3, that the 5 wave actually wasn't done and it actually ends up going closer to the 4.618, and I was wrong about the 5th wave being over and it ends up going closer to the 4.618 and then correcting.
Again, you have to draw a line somewhere.
I understand. I'm just curious. So it's a question to ask Craig, I guess.
I guess so.
Why is something he doesn't do?
Of course, the price could go up to the 5.618, the 60.61, but at some point you have to draw a line on what you're going to take and what you won't take. So, and the 3.5A is based on the actual zigzag correction pattern. If it's a flat pattern which exists in the actual Elliott wave world, and it's more like this, then you will get stuck out of the 3.5A. But the vast majority of the Elliott wave doesn't have an actual flat pattern; it has a zigzag pattern.
Right.
So
yeah.
In the trading world, you're actually you're aiming for something that happens most of the time. Even if you're gonna get stuck, it's part of the journey.
Are there any ways to kind of determine that you're looking at that you could potentially see a sideways correction coming, or is there anything that
not that I'm aware of?
Maybe like when the A actually does break the 2 to 4 trend line, it's more likely. Like it seems
I like that.
Like it's more likely it's not a horizontal correction, you know. Yeah, I mean.
Yeah, it's a good. I think you could be right on that. If there is a trend line over here which is not trend and the price is breaking out of it and retesting it in the actual world of the trading, that's a good sign of reversal in there, because price is coming up to that trend, retesting that trend, and usually sellers are over here at the same point as you, waiting for the retest and shorting back down. So yeah, it could be a good sign. I like the retest of the trend line. That's a meeting. I know Craig is trading it a little bit right now, but it's not part of the actual 3.5A rules. But I like that. I like to see as much confidence as I can that my trade is coming is going to come down.
Yeah, that's become one of my rules. Honestly, it's become one of my rules, and Same with the, what was the other one that you do? The divergence. Yeah, divergence is a must, and 2 to 4 isn't a must for me, but it's very very strong compliments for
Oh
me.
yeah, again, if you see the RSI doing the price action is doing higher highs, and you see the RSI doing lower highs, then it's the divergence of price. It shows weakness in the actual pattern of the buying pattern, and it shows that the price could reverse on that specific place. I'll show you guys what I mean by that. And other added confidence. If you see a downtrend, let's say where we were in uptrend after that, let's say we were in this, and you're fibbing that specific level, and your fifth wave is arriving at the 618 of that move, then it's added confidence that your fifth wave is a real fifth wave, and your protection, the 618 actually add protection to your fifth wave as well. So it's super added confidence as well in there. So let's find an example of that if you guys want to see example. Now we are on the 50 minutes. I know price is so much sideway action right now. You see that was the weekend, right? Friday dead. Like that's why I don't trade weekend. I just see if you're scalping, you could get away with that, but we see no movement at all. It's so hard to trade when you trade general price action. Right now, I don't see anything in there. Maybe I see this on Phantom. We could see a one wave here, right here. We could see third wave, or maybe this is the fifth wave, or 5. Let's go on the 5 minutes because this one is a little bit. Yeah. So this could be. See how the 4 is simple in that specific move, simple as it's a straight move up, and the second wave here is a little bit more complex. We got up, down, coming back up. So yeah, that's actually complexity. And if we have a 5 over here, do I have other confluence on my 5 being a real 5? If I fib that level here, do I have something? I don't. It's not arriving at the actual spot. And if I fib that level, I have a much more confluence around the 361.8 over here. So price could come back down here still. And we don't have any divergence of price, so nothing to see here for now. See Gala. Gala was in a downtrend. Still in a downtrend. Retest that region and still going back down. Gala is going into the pit of despair right now. Let's go on the daily just for fun. Yes, so much. So down. Even made a lower low on here. Crazy stuff. You think FDM is in the ABC correction already? On what time frame?
Joe,
Yes.
what is the best time frame to go looking for trades? Do you go on the 1 hour or the 15 minutes?
I use 15 minutes because it's quicker than 1 hour. If you want to do 1 hour because you have less time to trade in a day, and yeah, you could do 1 hour, but you have to understand that it's going to take more time for the trade to get realized and for yeah, so you're gonna take, it's just gonna take more time. But yeah, usually even if you go higher time frame, you have more, it's more visible. You know, on the daily, you have a strong confluence around the fact that you're on the daily, and if you see a nice immediate wave and it's valid, now you're gonna see that a lot of sellers or buyers gonna come in at the price point for sure. You can trade on the daily. I'm not, because I'm a daily trader in the heart. I don't want the trade to take days for me to see the result of it. Let's see that this 1, 2, 3, 4, 1, 2, 3, 4, maybe this, but and don't forget to zoom out. Now I know what I'm just charting, and we'll see. Well, I don't like that much, no. If we do a trend line over here, we see we have uptrend and we break out of it. So it needs, for me, if I need to pay attention to 358 or CH1 in that specific case. If I zoom out on injective protocol, okay, 1, 2, 3, 4, 5, 8. No, it bust out of it. Let's see, do we have one over here? A good one. We could have one. 1, 2, 3, 4, 5. So that's on the 15 minutes, but I think it's already done anyway, but it gives you a good idea of maybe it's on the 30 minutes or on the 1 hour. So we have this, not even getting filled. Maybe you get filled on this one over here, on this A, B, and C. But it's a short wave compared to the actual 3 and 4. I would have guessed that this here is more of a B, and C is still yet to happen. But you wouldn't have get filled anyway on that because the 5 to the still missing the trade, the actual entry at the 618. Okay, 1, 2, 3, 4, 5. Maybe another one in the 15 minutes. We have this one here because you can find on the 1 hour you can have a big Elliott wave, and in there when you zoom in on the 15 minutes you can find those as well. Those are fractal. What we call fractal patterns, so you can find them inside of it themselves. So a good idea for you to actually zoom out and zoom back in if you choose to.
Do you ever consistently trade fractal, like smaller time frame ones? Like say you're in a fifth wave and you see that it's forming a fifth wave, like Elliott wave fractal. Do you trade those?
I landed like a few months ago. I landed some kind of 11-to-1 risk ratio because of that. You see a big wave, you zoom in, you see a tighter entry using that big wave and other fractal in there, and you ride it to the actual take profit of the bigger wave. So that's basically what the 358 max is going to be, but we're still not sure on how and when it's gonna come out. But that's good. That could be a good thing for sure. So in here we have, are they both complex? Let me zoom out. Huh. Yeah, maybe the second wave is a little bit. Yeah, second wave is simpler than the fourth wave, but not by much. It checked the box, but not by much. If I flip that one wave over here, okay, we have room. It's a big wave though. Okay, now if we would have find an actual entry on this one here, we'd have still yet to find one. So that would be our entry. Stop loss over here. I think it's gonna be a shitty risk reward anyway. So if we do this from 5 to A back to 5, it could still be valid. This one it could be valid. Why? Because let's try to add the other confluence. So we see that we have a trend line over here. See if we draw a trend line from 2 to 4. We broke out of it and have yet to retest any of the level below. We could still, no, we cannot do an actual CH1 on that. Do we have a divergence of price? We don't. So the third wave is here. Fifth wave is, yeah, it's a long way to go. Let's go on the 1 hour to see if. So third one is here. Fifth one, it's a big time frame trade, maybe even on the 4 hour. Even, yeah, better on there. So a lot more complexity in the fourth wave in that specific level. 1, 2, 3, 4, 5. 5 is fine. 3 is not the smallest. 2 is not going past 0. 4 is not going in the price region of 1. 5 is in the price area of the 261.8. Got rejected out of it because of those wicks. We don't have highlights on this. We like to see highlights on the Innovative Trade Pro indicator on those specific levels, the 3 and 4, and now we don't have that. Do we have divergence of price? We don't have divergence of price. So it's a so-so trade. It's not a very good trade. It's not a very weak trade. It's a so-so trade. I wouldn't take that because you take the best one that you can. Remove indicator. Remove indicators. You take the best trade as you can find. If you're not so much sure about the trade, just don't take it. That's on 4 hour. Go back on the 15. Let's go at LDO. LDO is so much down pressure again. Okay, LDO. What is going on with LDO? We have 3, 4, 5. Do we have that? Let's try this. One wave. Not yet. We don't have the touch on the 261.8, so that could be a one wave. That could be fourth wave coming down to 5. Do we have other stuff around that to add confluence? And some kind of a triangle pattern right now.
But isn't the fourth wave as complex as the second one?
Yeah, it could be there. Of course, it could be there, but right now I'm not sure because I don't have a valid 5. So it doesn't matter if you choose this or this. It doesn't change the actual fact that the 5 is not there yet. That's the reason why I didn't expand on that. But yeah, it could be there for sure. If we zoom out, I think we're some kind of a triangle pattern right now on many of the coins. Yeah. So touch here, and we probably gonna touch over here. We could touch on the 261 and bounce, which could add confidence around that trade. We don't have any highlights on the third, and we have yet to see 5. I'm gonna flag that to check it out later. Link is on fire. 1, 2, 3, 4. We could have a 5th wave on here though. And we have, I think so. So this could be a 1 wave. This could be third. Is it the third, the smallest? I think not, but I'm gonna measure it just to make sure. Either by doing this, 11.8%. 15. Okay, so third is not the smallest, which is fine. Do we have complexity? A little bit more complexity in the actual second wave than in the 4th wave if you place a 4th wave like this one. I chose this one over here because for me, this is more of a 4th wave than this one over here because it's deeper retracement. You can even use a fib retracement tool and fib the second wave to the 4th wave. And usually we like to see the 4th wave coming to the 382, like this one is right now. It's consolidating at the 382, the 382 mark. And usually in the world of the 35A, the world of the Elliott wave, this is the one of the price region that the 4th wave is arriving to. So that's a good idea for you to fit that for sure. Do we have a reaction other than that? The 161.8 third wave is actually consolidating at the 161.8, which is a nice thing. Do we have, if we fit the wave, do we have other? No, hold on. Do we have other confluence around that if we fit the all wave? We have the 1 wave, the 1st wave consolidating here, touching that level. So we see some kind of respect of those levels, but that's going to be a long trade though. Yeah, it could be a long trade because we're on the 1 hour on that level. Do we have other stuff around it? 4 hours. We see what we see. This here, so much. No, it's not something I want to look for. We made no higher highs on the 4 hours. Kind of moving sideways still. We made an effort over here to hold that trend line. Yeah, we bounce here, we bounce here, we bounce here, back down. Yeah, it could come back down, but I don't know about that. I'm gonna make sure that I'm gonna watch that for sure because Link had a big push and needs to have an actual relief on somewhere soon. The third wave, let's go on the 4 hour again. I think I saw highlights on the third wave, and the third has a highlight. 5 has a highlight, but no divergence of price. I'm gonna draw a trend line from 2 to 4. I'm gonna wait price action. What I want to see right now is the A to be like this. And even better if it does this in one straight line. Yeah, of course it's gonna happen, Joe. I don't think it's gonna do that on the 4 hour. It makes for major push down, but yeah. I like the retest of the actual trend, but it's not gonna happen. It's too much of a trend line right here. So A, B, and C.
I have a similar chart drawn on Link, except the 1 wave is further to the left. It starts, yeah, see, yeah, like that. That was. Oh wait, no, it's even further, I believe.
This one here. Yeah, it's a weird one though because
the
wave has to be proportional to the actual other wave.
It looks different on Bybit. The 1 wave is is flatter. So and the 5th, what I have as the 5th wave, it looks like it's touching the 2618 really nicely.
Yeah, that could be a trade. We'll see. I'm gonna watch it. Yeah, of course. If you want to take a look at the other exchanges, just to make sure that you have a confluence of other exchanges, I guess. So that could be a good thing as well, because price action on one exchange doesn't mean that the price action is going to be the exact same. But if you see a nice confluent 358 in one exchange and you move to another exchange, popular exchange, and you see the other exchanges showing the same thing, then it's not a confluent.
I just posted in Pure Trade Ideas what I'm looking at. It looks a little different. Yeah.
But that's a 4 hour trade. It's gonna take days for. Sometimes you get surprised out of this. You get feeling like Bitcoin's dump and you're getting out of it in matters of hours. But 4 hours a candle, it's gonna take weeks. It can take weeks for you to get filled and to get either stopped out or take profit. You have to be ready for that for sure. But you trade what you see. If we don't see anything, we don't trade it. If you see something on the 4 hours and you want to trade it, yeah, go for it for sure. But 4 hours, take that into account.
Can I use the Fibonacci tool for between any wave in the Elliott wave theory to get confluence?
You can, yeah, of course. You're gonna have to. I'm gonna have to review the books of Elliott wave for that. But if you take a look at some books of on Elliott waves, there is some region that the price come to when they retrace, and those specific region on 4 and second. So yeah, you can take the Fibonacci retracement tool on the 1 wave and see if usually what Craig's like to see is when the price comes to at least the 618 on the 1 wave, then you can expect the 5th wave to come at the 2618 or the 3618. If the price is a shallow retracement, so it ends up being the 1 wave ends up being at the 0.5, then you can aim for the 161.8 for the 5th wave. Why? Because usually we consider that as a spring, right? So if there is a lot of pressure down, it's going to bounce up just like a balloon inside of a pool. So the further you go down, the stronger the reversal is going to be. And if it's a shallow retracement, then the less possible it is for it to reach the 2618 and the 3618 on the fifth wave. So.
Okay, but I mean, for confluence, I can use, for example, the Fibo between the 3rd and the 4th wave, just to see how it aligns with the 5th wave, right? So I can basically split it up between any.
I didn't use that on the. You mean the Fibo retracement tool, just like this one here?
Yeah, and you can see if it aligns with any level, right?
Sure. I mean, that's it's not part of the Trade 358 rules, but if you find that you have good result and you're hitting those levels when you flip those levels, yeah, of course, do that.
I've been reading it all for the last week or so, going through the Elliott wave and Fibonacci sequencing, and there is specific rules, not in Evertrade rules, but of where the fibs are supposed to hit and relations on every single wave. So I can share it if you want to message me.
Sure, I know that there is a bunch of those, but the thing is, you don't want to get paralysis over analysis, which is kind of where it could lead sometimes. So you need to. I know Craig chose some specific rules and backtest those specific rules, and he stick to that, because if you take too much time to analyze your actual chart that you miss a trade, then you're not getting nothing. You're getting nothing out of it instead of actual taking the trade based on specific rules, which are your rules, are good rules, and move on with your trade, right? So you have to.
You can just get lost in it otherwise. I completely agree.
I know the Elliott wave is kind of a deep subject. It can be so much complicated if you take a look at that. And yeah, of course, if you have you want to add confluence in your trade and you're good with that, then of course go for it. But sometimes, does it worth the actual effort that you're going to put into that? And that's going to be a question you yourself going to have to answer for sure. I don't see anything in there. Maybe this.
Try H bar, Joe.
H bar?
Yeah.
What time frame are you looking at?
If you go 5 minutes.
You were looking at it long, right? I think I was looking at the same thing.
Yeah, so you're looking at a long. So there's so I think the entry point of wave 1 is.
So like this one here.
Yes, yeah. It hits bang on to 61.8.
Yeah, so we have a trend line here breaking out of it. So that could be a 1 wave. Do we have other confluence that you're?
If you scroll out, it's sitting with a channel as well on a 30-minute.
We have a double.
Oh yeah, they're having really nice contacts too.
You have a double button over here, so that could be a nice trade as well. You're talking about channel? On what level are you?
Yeah, if you go to 30-minute, Joe, it should be. There should be an up. There was a downtrend that.
Hello, please, I share.
Around about 5th of September.
Like this, right?
Hello.
Hi.
Hello. Hi, please, can you share your fib setting, please?
Do I share what?
Your fib setting.
My fib setting.
Yeah.
I use a regular fib setting though. You guys know that you can customize those, right? A fib level, fib level. I know you guys have that for like you want to see a fib level, but I'll let you take a screenshot of that.
Okay, thank you very much.
The 618 on my specific settings are the 618 that you're gonna find on your setup. But yeah, so that's the fib retracement tool I use, complete one. But you can add specific levels if you want to. Yeah, but that's a good trade, guys. The H bar trade, because we have confluence of the actual channel. So we have an upper channel, the fifth wave touching it. Do we have other? If we draw another,
So I was actually in the trade of the CH1 on the 30-minute anyway. It's only I've just looked and saw that there was that mini 358 as well.
yeah. So we have it,
And then if you
double bottom over here.
if you do the 2 to 4 trend line and then clone it and put it on the edge of 3, it perfectly intersects with the 261.8 as well.
Yeah, I didn't actually watch the. Let's take a look at this. So that's on the, yeah, it's on the 30 minutes, maybe more. The second wave, second wave is complex.
Yeah.
And fourth wave is simple, which is fine. It is nice. Yeah, we have a hit on the 261.8, nice rejection out of it. Yeah, that's a nice trade. Nice, fine.
It's just now about to break 3, right? Or has it broken 3 on there yet? No.
It's got to break 3, then it's got to break that 2-4 trend line. There's divergence on the
it's really close on Bybit to breaking that 3 right now.
And then it's also got significant.
Do we have
more
divergence?
volume.
Yeah, we have divergence rise, but we don't add the break of the trend line. That's one thing that.
Not yet.
Yeah, but we have other confluence around that, so that could still be.
So I had a quick question about divergence here. So, like, you see those highlights? They're not lining up perfectly with the lines. Is that okay? Because
that's not divergence. That shows overbought and oversold.
So yeah, those aren't lining up. So the fact that those are within the waves is okay.
It will be
those oversold. Is that just the wave 3, right?
It will be.
Mine's showing a little bit on 5 too, but
it will be added confluence if you have those highlights as well as divergence.
Yeah. But when you look for divergence, do you grab the exact low in this case of 3? Like you put a horizontal or a vertical line from the 3, and then you use that point, or do you use the point that it went to the lowest? Like, yeah, like if you grab the
price, okay, price action doing lower lows.
Okay, yeah. So
and the RSI doing higher lows. So that's a divergence of price.
Shows
powerful move could happen to the upside.
And it's reacted really well off that 261.8 as well. It's been a pretty much vertical line at the moment.
Yeah, it's a nice trade.
Is this not a smaller time frame trade though that we're looking at? You're looking at the 30-minute right now, but is it not really like a 5-minute?
No. 5 minutes is too small. There's too many things happening. The 5 minutes you could see even sometimes you see in the fifth one a 358 in there, like this one here. It's not, but sometimes you see that as well. So it's not a 5 minutes for sure. It's 15 or 30, maybe even 30. 30 minutes could be even cleaner. So the price broke until the third one right now. If we take the actual channel, it could be a nice one. We'll see. I'm gonna watch that for sure.
There's another nice one on AVAX as well if you want. That's a short.
Yeah, I'm gonna try to answer some questions in the chat. Do you guys have questions? I know John Monzo is actually.
Where would be your entry point here for this trade?
What would be the entry point?
Yeah, for this trade now that you have on your screen.
I'm gonna wait for the B wave to be ended.
It hasn't broken 3 yet, or
it's not done yet. So it could go over here, it could go over here. So I don't know. I'm gonna watch it. But in that specific, if the price is not pushing higher, that will be the actual trade over here. Some things like that. But entry point is gonna be at the 618 of the A to B move. So if the price is not pushing higher, this could be some things like this, a little bit maybe down here. But I'm expecting the price to push a little bit more than that. But that's going to be the 618 of the 5 to the 5 to A move is your entry point. I have a question. Where's my change? Jay, you can go for it.
Awesome. Thank you so much, Joe. Maybe this is a dumb question, but you say it all the time. But I've been trying to find the 358, but sometimes in the chat, someone was saying like, "Oh, you have to find it when it's a trend break." But can you find it when it's not like a trend break? Example, like I see that your number is right there, the peak. Could it be like your 358 could start maybe on your number?
It needs to be at the break of a trend or a retest of it. So now it's going to be time for you to use your judgment on that. But it cannot start in the mid price action. Sometimes I see this 1, 2, 3, 4.
Yeah, exactly like that.
But this is not at the break of a trend. This is mid-price action. You're just asking to
Okay.
stop in this find the best trade that you can with your knowledge and trade that. Don't trade shitty trade. And that for me would be a shitty trade.
Okay. All right. So the best thing is to like start it on the break of a trend. That's kind of like the best.
Yeah.
All right.
Yeah,
all
Well,
right,
it's
thank you.
kind. He's saying it's kind of a rule, like is what he's saying. It's got to be a
Yeah.
trend break for it. Yeah, you got to start at the beginning of the trend.
Yeah,
that's the rule, right?
actual rule of the 3-5 anyway. So it has to be to be valid. You have to see the one wave at the break of a trend.
Okay, correct. Yeah. Thank you, Joe. That's great.
Okay, H bar. Okay, nice. We have H bar covered. We're gonna watch that. Alternation, rule of alternation. Okay, a little bit more on alternation. Can you spot the difference between this? Let me zoom in. The fourth wave here. See, we have 3 candles which are all in the same direction, and take a look at 2. Can you see the difference? Can you spot the difference? Because we have a nice push up, push back down, nice push up, push back down, and a nice push up again. This forming 2. So this is a complex wave, and this is a simple wave. You need to see complexity in one of those waves, and yeah, rule of alternation is that the fourth wave must be complex, or the second wave must be complex, and the other one must be simple. They cannot be both complex and both simple. This is one of the actual Elliott wave rules. It's not even part of the 3-5-8 rules. It's part of the Elliott wave book. So that's about it, guys. I'm gonna end this actual mentoring session. This is gonna trade H bar. I'm gonna watch that for sure because it checks all the boxes for me. And yeah, if you guys want to follow up on that as well, I might be signaling that as well in a few hours or a few minutes. So if you have more questions, I'll be around the actual chat. Again, I'm moving tomorrow, so I have limited time. But yeah, maybe Sain, you have a question? You have your hand are raised. Last questions?
Hi, Joe. Thank you so much. I was just wondering, when you're actually putting in the trade, are you using isolated or cross margin?
Always use isolated if you don't trade the TCL. If you trade the TCL, those are cross margin. Difference between the two is the cross margin. Use all your other trade opens and all your other balance in your account to cover for the actual margin that you're using. Isolate trade, just use the isolate portion of your trade open. So you can still trade other trades, and that one won't get you liquidated. But if you use cross margin and you have multiple trade open, then the exchange is going to pool some of those liquidity from other actual trade that you have open and might liquidate your position sooner. So yeah, always use isolated.
All right, so except for TCL, when any other you do isolated, and you can do multiple trades at a time.
You don't do multiple trade at a time when you do TCL. You do one trade at a time. That's the reason why you trade with
Exactly.
Okay, yeah, you got it.
But with the other ones, you can do multiple at a time.
Isolated, you cannot do TCL multiple at a time because TCL is only cross margin.
No, but yes, you can do multiple 3-5-A's and CH1s.
Yeah,
is what she's
that's
asking.
it. But I just want to pay attention to that fact that TCL is only cross margin, and no, you cannot open other TCL using cross margin because it can get you liquidated. But yeah, of course, you can use multiple isolated trade in 3-5-A's and CH1 without problem.
Yeah, exactly. Thank you.
You're welcome. Here you go, guys. Have a great day of trading and a great week as well. Take care.
Thanks, Joe. Good luck with the
Bye,
move.
Jeff. Thank you.
Thank you very
Good luck
much.
with
Yeah.
Bye bye.